JJ, the CPA here. Hope you're doing well. Well, for the billionaires that are tuning into this video, welcome to my channel, because it might be the first time you've watched one of my videos. Might be the first time you've watched a video on YouTube to figure out what's going on with this billionaire tax. And I'll tell you this right now. There's about 770 of you, as I've read in the national publications, that this would affect. And so the real reason that I'm glad that you tuned into this video is for you to be, in essence, not really fooled by what's going on in Congress and why this is even a subject that every major news outlet seems to be covering or addressing or discussing. Why? Because it's sexy. You hear billionaire and you think, oh, wow. And you think billionaire and you're like, well, yeah, they should pay more. Well, what is the billionaire tax? It's pretty simple. Basically, it's something that will never happen. But if it were to go into law, it basically would tax billionaires that would have assets, in essence, at a certain dollar amount that qualifies them to be a billionaire. And whatever the value of those assets are on a specific date, well, there'd be another date that you would compare it to. And if there was an increase in the value, then there would be a tax on the increase in value. Of course, it's unfair, but most likely there isn't one billionaire listening to this video. And therefore, for you, what you want to be doing is not being fooled by the headlines, because basically what's going on is there's this over here distracting you while they're over here raising taxes. What can you do about it? Maybe nothing if you're really cynical about the entire thing. But by you getting to here, you probably feel that there is something that you could do, which is pretty simple, actually. Reaching out to your congressperson as well as your senator and picking some subject matter related to taxes that you don't want increased. Now, it could just be, I don't want any taxes increased. It could be you don't want the corporate tax increased. There's a number of things that are happening right now in D.C., but what is really tricky, and it's not that tricky for those that are paying attention, but it's what really tricky that they're doing is they're talking about this billionaire tax over there that only affects 770 Americans. And they're saying, oh, well, we're going to tax this value. Now, of course, there's a lot of talking heads in the media that will say, well, gosh, if they're going to do that, maybe they're going to start doing this down here. And all this is this, and it's noise, because in the background, what they're doing is putting together what's called the spending bill. Now, this isn't about politics. The spending bill may have a wonderful program for you and your neighbors and your congressional district, just the same as the infrastructure. What does Congress do, and what do they do best? Spend taxpayers' money. It's just a fact. It's not a political statement. It is a fact. So right now, literally what is being passed or about to be passed in the House is literally called the spending bill. Many are thinking, because it's logical to think this, that the tax increases that we're hearing about that are going to pass, what kind? Still to be seen. But what we're probably thinking logically is that it's to pay for the stimulus that's been provided over the last year and a half or so. And you would be wrong, because all of the tax increases do nothing to pay back, in essence, the government for what it had to do to cover Americans during the pandemic. What it is doing is literally paying for new spending. Great. You may have a pet project in there. You may be all for the government spending a whole bunch of money. Great. Good for you and your opinions on any of that. As a certified public accountant, what's my number one goal and job, and why do my clients hire me? Why are you tuning in? Well, I like my clients' taxes to be lower. I want them to pay no more and no less, but their fair share of taxes. But these tax laws that are going into effect, many of them will be those that are inescapable, such as a rate increase, whether it's on individual taxes or capital gains. Is that a bad thing? I don't have an opinion on that. What I have an opinion on is for you to be aware and not to be fooled by what's going on with this billionaire tax, because it's ridiculous. It's not complicated. It's pretty simple. What's an asset worth at this date? what's an asset worth at this date, and if there's an increase, it's taxed as a gain. Well, what if there's a loss? Why do we care? Because I guarantee, most likely, with all due respect, you're not one of the billionaires that this is going to affect. So pay no attention to this. What you would want to pay attention to is, what are the tax laws that are going to affect you? Do you want to do something about it? What is that? Reaching out to your congressperson. The DC, if you will, community, Congress, if you will, is indicating that they're close to passing, but there still seems to be big mystery. We know that when we got to the end of 2020, there was the Appropriations Act that was well over 5,000 pages. And in that, it included many well thought out laws and information in the bills that benefited a lot of different people. All I'm saying is that it wasn't a surprise to those that put together the language and then presented it and passed it. What happens in DC is just like I'm sure it's always happened well before either one of us was born, which is they distract everybody over here with something that's quite ridiculous, a billionaire tax that affects 770 people, a billionaire tax that really is not logical, a billionaire tax that really would not come into play, a billionaire tax which, by the way, would be pretty easy for billionaires to figure out how to get out of. How? Well, those 770 people that have this distraction over here, they're going to hire plenty of people to ensure that it either doesn't affect them and or they pay the least amount, which would again be none of your concern. What we want to be in essence concerned about is the tax increases. And I'll tell you this, I understand that what we're hearing is that no one will see a tax increase that makes over $450,000, and therefore a lot of those that are tuning into my channel may think, well, that's for the wealthy, that's for the rich, and I don't make that much in terms of my taxable income. Many of you are making that much, but what I really want to drive down to is that it's in essence a false statement. It's technically probably true, but overall it's a false statement, because anytime tax rates go up, they bleed down to all the lower tax brackets. The other thing that happens is, as the tax rates go up, you also get into them quicker, which is what's being proposed in the laws that should be passed here and then become law sometime in the near future, which is, I'll give you one example and then we'll wrap up. One example is that what we hear is that the top tax rate is going to go to 39.6. What we know is the top rate is 37% right now. And most of us would think, well, that's not a big deal. It's 2.6%. Well, maybe it's not, but let me tell you this. Right now, when you get up to the 37% tax bracket, it is well over $600,000 for married filing jointly. It's over $500,000 for a single individual before they get in that top tax bracket. Under the law that is looking to come into play and we'll be dealing with when we get into 2022 will be, you get in the 39.6% bracket at $450,000. What does that mean? Well, that means that the top tax bracket, you're going to get into it here, where currently you don't get into the top tax bracket until your income is there. That's a pretty big increase that comes into play, even though it effectively might be considered only for those that are making $450,000. But any rates below that, you're going to get into them quicker, because if we're getting into the top rate quicker, you bet your bottom dollar you're getting into the lower tax brackets quicker. If all that was mumbo jumbo to you, here's what I just need you to know. Your taxes are going up. Maybe it's $500 for you and it's not a big deal. But those taxes are going up not to pay back the government or to cover the government for what they had to pay out on the pandemic. It is going to pay for new spending for what is literally called the spending bill. So in my opinion, when I'm looking out for my clients, when I'm looking out for you that are part of my YouTube family, what I don't like is that taxes go up to spend on new spending when our government gave out a lot of probably well-needed funds, but now those need to be paid back. Not one of you or any small business owner that just went through the pandemic, like you just did, would then be in debt related to it, and then go out and find new spending without addressing repayment. Now, that would be trying to fix Washington. Not a political statement. We're talking about numbers here. Here's the deal. When you sit back and you think, well, the tax is going up on the rich, and we might as well increase the taxes because we paid a lot of stimulus, just keep in mind, it's not paying for the stimulus, number one. And number two, put your feet down, because the taxes and those increases are going to affect you one way or another. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.